Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. In this video, I will show you how to find the best sector for trading using technical analysis. Well, I use the three approach to choose the sector which will be a good momentum trading or an investing. So first is a traditional pattern or a modern pattern, whatever pattern you are using, be it Elliott wave, be it harmonic, be it candlesticks, be it trendline breakout, be it channel breakout, whatever kind of basic stuff or technical analysis pattern you follow will be under the first type. Second is the intermarket analysis, which depends on commodities, currencies. And third is the outperformance or underperformance against the benchmark indices. And third approach is very, very important, and why I'll show you. So let's look at the first, what is covered in the first, the traditional. As I said, you choose the chart type, be it the bar chart, candlesticks, point and figure, Kagi, Heikin Ashi. There are a number of various types of charts. Patterns, n number of patterns, head and shoulder breakout onto the sectoral chart, channel breakout onto the sectoral chart, and there could be Elliott wave theory, whatever harmonics, whatever you are using. Average, some people play with moving averages. When the sectoral index move up above the 200 as exponential moving average, which is the long-term average, they tend to buy. Some prefer golden crossover, which is about 50 crossing over the 200 as average, they go long. Some prefer the three guppy moving averages, where the short to medium to long term averages are there, and the sector moves above the guppy averages, they prefer to invest. And again, the fourth is oscillators, being the RSI, MACD, and I have discussed some of the RSI strategies as well to an investing. So in case you missed that, you can go to our archives and watch our videos. So some of the charts which I'll be sharing on the traditional is, if I look at the realty index, which I have done a week or a couple of weeks ago onto the realty space, where I've highlighted the multi-year or the decade range breakout happening onto the realty space, and the realty index is very, very hot to go higher. Similarly, on BSE Power Index, if you look at the BSE Power Index, it consolidated in a range for more than 8-9 years, and then it broke out. So some might prefer the traditional way of investing using technical analysis, where the multi-year trend changes and they tend to invest. Second is intermarket analysis, where I am using commodities, when I'm using currencies, and there are bonds, there are n number of stuffs using intermarket. So I've just taken some of the example as commodity and currency. So let's look at the first. This is the gold chart, and if you look at the triangle structure over here, this breakout, I guess, precisely in July 2019, June or July 2019, when it broke out, and the gold rallied from somewhere around $1730, $1740 to around back towards $2100 during the pandemic times. And if I just look at the market analysis, what are the stocks which can benefit from the gold? Some might prefer jewelry stocks, which it's again a debatable, though it's when the gold prices go higher, the inventory gets the margin hits. So again, I'm not getting into the fundamental stuffs of debate, but for me, generally when gold prices go higher, I tend to look at the gold financing companies. So Manappuram and Muthoot can be one you can look at. So if I just look at the Manappuram over here, so if you look at when the gold prices broke out, it was trading somewhere around 110, 115. It went back towards 180 in a quick time. So you can look at in those manner. Muthoot Finance, if we look at the structure where it broke out the previous highs much before the gold prices broke out, we have seen a rally somewhere around 580, 585 to around 880, 850 levels on the upside on the Muthoot Finance. So you can keep a watch on such commodity space. Again, copper, most volatile commodity, I would say, most traded commodity after gold and crude is the copper. Now, if you look at copper since 2011, for the first time broke out the falling trend line, and it broke out somewhere when the pandemic recovery happened, the V-shaped recovery happened. And one sector when you look at comes into your mind when you look at the copper breakout is the metal space. So if I just look at the metal space, look at the metal space. Right from 2018, it was forming lower high, lower low structure. So if you look at the lower high, lower low, lower high, lower, and the first time, if I look at the first time it broke out in July, August, the previous high was taken out. Second high was taken out somewhere in November, start of November or mid of November. And I've created a video at start of 2021 looking at the same structure, that copper prices are breaking out. CNX Metal Index is making higher low structure for the first time after nearly 3 years. And I guess 1st of Jan 2021, I did a video on Equity Master YouTube channel. You can watch that video as well. And I said that this could be the sector you should be watching and investing in, and this would be the sector for the year. And look at the metal, CNX Metal Index has gone, or Nifty Metal Index has gone up to the higher level. It nearly gave somewhere around 3000 to somewhere 6000 levels now. So this was the, again, looking at the copper prices, I looked at the metal index is breaking out and it's a time to invest in. This was the second approach which I look at. The third approach is I use the ratio analysis to identify the outperformance or underperformance of sector indices against the benchmark indices. So what is ratio analysis? I've done a video on the ratio analysis as well, so you can get in detail on how to use it. In simple term, I'm taking a sector, dividing the prices with the benchmark indices, be it the Nifty, CNX 500, whatever you are looking at. So in this case, this is the metals index, the same chart which I've divided with the Nifty prices. Now if you look at 2018, the ratio chart was forming lower high, lower low structure. The first time, if you look at the dotted two black lines, the first it broke out in July 2020, July August 2020, and again into the if you look at the momentum, the second high was taken out in December probably 2020, and that was the again second confirmation for me. With the copper prices breaking out, with the CNX metal making higher low structure after ending the 3 years of lower high, lower low structure, the outperformance chart is giving me indications that metals prices are about to outperform against the Nifty. So this was again the third approach where I have synced all together and indicated that the metal prices will outperform. So I use this three approach of technical analysis to identify this sector, and you can try various stuffs. Do comment into the comment section what kind of approach you are using to identify this sector, which could be for trading, which could be for investing, and in case if we like, we can come up with a video on the same, so that our audience will also try to learn new things. So signing off, Brijesh Bhatia. Thank you.